This video, we're going to go ahead and talk about a particular stock that I have high conviction in. In fact, we talked about this stock not too while ago, back 5 months ago to be specific, on July 11th. We spoke about the box stock, and I want to go ahead and essentially just mention just a very quick splurp here, doing an intrinsic value calculation. We spoke about it near the $26, $27 region here, and we can go ahead and play it very shortly, which makes sense because we're in a bear market. Oopsies. Slash quasi recession. The base is 36 and the bull is 53. Now, based off of these numbers, off of the bear case, we should expect at least a 15% return year over year with the stock, based off of the bear case here. Because if you type in our discount rate, which is 15%, the green now is part of the red, 20. And that's exactly what we basically received. We got a more than an 18% gain from essentially year to date, which literally has outperformed the market. So I'm very excited in that regards with our box stock here. Because if you were to look at the stock right now, it's now $31.24. And if you were to go year to date, we're up 18% rather than the market is actually down that much. And if we go ahead and talk about 6 months ago where we talked about the stock, near the, I want to say, $27 region. So that's about a 14% gain. I believe, right? 14% gain that we went ahead and discussed, which is right around our intrinsic value calculation for that year. So the question we have to ask ourselves now is this still a company that, I want to keep holding, right? And that's kind of the argument I have to kind of go through with each company, even ones that do well or ones that don't do well. And I can see that, this company has underperformed for quite some time because of their free cash flow not increasing adequately. But now we're starting to see the fruits of Box's labor flourish. So what we're going to do is we pull this directly from our Brain Machine, which is our proprietary software that helps basically get financial data, so we can go ahead and I can essentially look at it and see the companies I want to invest in. But overall, I can see that this is from 2013 to now. I can see that Box's revenues have been going up. Their gross margins have dipped slightly, and now they're finally going back up. When I say dip slightly, I mean 70% gross margins. That's like, you can't find that anywhere else. That's amazing. And if you look at net income, they're still negative. But if you look at my favorite here, my favorite of favorites, we see free cash flow. And they flipped the switch back on, let's see, what year is this? 2018. But what's interesting is look at the free cash flow now. So I did went ahead and took the average free cash flow of the past couple of years. And what I'm going to do is I'm going to do an intrinsic value right on the dot here to essentially see, is the stock going to continue to outperform the market going into next year and next year, right? And that's very hard to do, but definitely, utilizing this data, we can definitely take a peer into it. So 215.7, okay? So 215.7. And we're going to go ahead and shoot this off to 10 years. And I like to always do around 10 to 14% based off of the calculations here, about 13% to 10%. So we're going to go ahead and for the revenue growth, they are growing more than if you look at them from a longer perspective for Box. But unfortunately, I do think we are going to see an earnings crunch, so it's better to be a little bit more conscientious with that. So we're going to go ahead and do about 14%. And then for the shares, again, we're just getting the shares from here, about 142.38, right? 142.385. And those numbers are in millions. So we can see here that we have a bear case of 25, which the price was of the stock was around that when we were talking about it, and we have a base case of $33, with a bull case of 46. So this still has some time to run, but we are nearing its base case. Now, once the market does go into its fusion frenzy, when monetary policy eases and the economic form becomes a little bit more easier to do business in, we can see that we can potentially do a 48% on this. Now again, a lot of the people watch channel, we like to talk about a lot of stocks, right? And when you talk about a lot of stocks, stocks like this don't get a lot of views because most folks, 48% isn't a lot for them. It's not life changing, which is, what I like to say is you got to have life changing income and a job to compound that to make life changing money, right? But overall, if you speak to wealthy folks, 48% return, 15% return, 20% return, that's a really good return. But when you see retail investors, they're looking for that 10, 20, 30, 40x, and that there's a lot of risks to that. There's a lot of risk, and you have to allocate your portfolio to essentially reflect that type of risk. Now, if you're young, it's okay, I would say, but if you get older and you have family and everything, it's it's good to have companies that have a proof of concept in a business. Now, what I do like about this company is, it's a great example, which is why I bring it up again, because you can see that all you need in a successful business is a company that does what it does, no matter what it does, and it generates free cash flow. Obviously, you need to look into the moat, making sure there's no competitors and all that. But once all that set is checked and all the boxes are checked, if it's making money, then you just got to basically turn the stock into a bond. And that's essentially what a DCF does. It goes 10 years into the future and essentially goes to infinity and says, if I were to hold the stock to infinity, how much would it be over here? And then let's discount it back in today's present value. And this is how much it should be here. So what I strategically did was I was like, hey, this stock is $25 trading at right now, but it's worth in the 30s. Of course I'm going to get it. And people that essentially saw that pattern were rewarded 18%, while the market, like the S&P 500, is down 19%. Or for example, if you look at Tesla, it's right now, as it loads, it's down 62%, right? So it's important to do intrinsics, and we got to redo an intrinsic value on Tesla for sure. But overall, this is the type of company where you gotta. I do think that it still has more room to grow. It's one of those stocks that I think is going to continue to keep growing. It's those things. It's the type of stock where if it continues to dip down, especially down to the $20 region, this is where you want to go. Because if you look at July from this, that's like 37% of a successful company, not like a pump and dump, right? So overall, that's kind of how I feel right now about Box. I just don't, for me, I'm definitely not letting go of them. I really do enjoy the company. I love the CEO and I love the culture that the CEO accomplished. But use this, I bring this to your attention to essentially use the free cash flow to help guide you, to show you exactly when you see a company that is successful. Now, a lot of folks, they like to say, Al, it's not about the fundamentals. Stocks are not about the fundamentals. And, those people are stupid, okay? At the end of the day, I hate to put them down, but those people are going to lose by blood in the money, right? But at the end of the day, if you can find a company that has great fundamentals and has a higher probability of success when they don't have good fundamentals, but they're building on it, then I would say it's definitely good. But overall, this is something that I'm definitely going to keep an eye on in terms of any potential dips. Not a lot of folks are talking about this company, which is unfortunate, but that's just how the game works. Now, I'm curious, because I haven't done this, doing this live with you guys. If we go ahead and take a look at the price target consensus of Box, yeah, it looks like there's not any recent price targets. I could have sworn there was recently an increase by JP Morgan Chase, but I think they just did it a perform. But yeah, I don't really see anything here. So overall, that's all I have for you guys regarding Box. I do think it's a phenomenal company. I really do enjoy what they do, and it has outperformed the market, which kind of always makes me worry. It's like, is it going to outperform next year? Right. I'm not really expecting maybe anywhere between a 10 to 13% gain, considering that I was expecting a 15% gain, but we ended up getting an 18% gain. We may be going down 3%. It might start basically falling down, which is when you use technical analysis to help guide you if you do want to day trade. But overall, this is a good company, good, solid company, has a great future. And yeah, that's all I have for you guys. I'll see you on the next one.